morning, Stock Twits Nation. It is Thursday, October 9th. This is the Daily Rip Live. I'm Katy Perry here, as always, with Shay Boloor, and we have a packed house today. As you can see, welcome to Alex King and Yimin Shu from Cestrian Capital Research, dialing in from London, where I'm sure it's sunny. I'm sure it's a sunshiny day out there. How are things across the pond, gentlemen?
Surprisingly sunny, cold, and otherwise, typically sleepy UK. So
Love it. I can't believe it's sunny. I was making a joke, and now the joke is ruined.
It hasn't rained since April. We're in a drought here.
So, Alex, you've been on before. Yimin, you're new here. Welcome. I assume you work closely with Alex over at Cestrian.
Yes, that's right. Thank you for inviting me, Katie, and having me on, Shay. So I have worked with Alex for 3 or 4 years now, actually, just after COVID.
Right.
I started with covering some macroeconomics because I used to trade FX swaps and rates on Wall Street, and now moving to work with him on the full-on research side. So we also have our own research service too.
Awesome.
Yimin actually knows what he's doing. It's very scary.
I was just saying, we got the heavy hitters in today.
Yeah.
This is going to be good. I know you guys got some.
It's very daunting. Yeah.
Yeah. The list of things we want to get into with you guys is it's deep. We're going to get into it. But for everyone at home, we're gonna deep dive with these guys, and then the back half of the show, we got Jake Wujastyk coming in. He's back from Hawaii. He's been pretty grumpy on X this week. If you're following him, I don't know, something going on with Bull. I don't know. We're going to get into it. Maybe he still has his weird Christmas cup, but that's coming in the back half. But let's kick off with you guys. I don't know where to even start. I mean, should we start with this short report from Kerrisdale on Bitmine immersion? Is that a good place to?
Yeah.
So, Alex, break down. I was reading about this a little bit. Break down what this short report covered and what your take is on it.
Okay, so the short report spends a lot of time saying the following things. Investment companies shouldn't trade at premiums to NAV, right? That's what it says. And the point it makes is correct. In general, investment companies don't and shouldn't trade at a premium to NAV. Why? Because, well, if you've got a single asset investment company, then if you buy shares in the investment company, it's buying some other stuff. Let's say, coal or steel or ether. And, why on earth would you pay more than the value of the stuff it buys to own its shares? And the answer is usually there isn't a reason. Bitmine and SharpLink and all the MicroStrategy or Strategy now and all the other digital asset treasury companies all spend some time trading at a premium. And the reason is because of capital markets marketing, right? So, if you subscribe to the Tom Lee and Peter Thiel show on Bitmine, and to be clear, I'm a shareholder. I've sold down some holdings. I've done really well with it, but I still own some of it, so I'm long the stock. Then basically you're buying into the cult of the Tom Lee personality, which is your bet is that pudgy penguins and moonshots and fantastic marketing work he does, backed up by actual real investment experience and skill, you're betting that he can keep the flywheel turning. And the Kerrisdale point is it's really simple, which is at some point the flywheel slows down and the value of the investment company drops below the value of the assets that it owns. So they're correct. It's a good point. And the whole question with Bitmine or MicroStrategy or any of these things is when does that happen? That it's going to happen is an inevitability. It's when it happens. So I think it probably will hit Bitmine stock this. I don't think it'll send it plummeting because they're not saying that Bitmine is a fraud or that they're lying about earnings or any of the things that often short reports cover. All they're saying is that this premium shouldn't really exist. And so that's probably going to give you some downward pressure on the stock.
So this is, you said you're a holder. So you're saying it's the time horizon then. You agree that in the long view, the points made in the report are valid, but we're not nearly there yet.
I think it depends on how skillful the capital markets marketing is going forward in Bitmine. So if you had Tom Lee on here, he would say, well, look, this thing's going to stay at a premium because of all the clever stuff we're doing. So, we don't just own Ether, you'll say. We own a single stake in ORBS, which, is a moonshot investment. We're going to use the capital that we raise to make other moonshot, his word, investments. And, we're super smart investors and we know where the world is going and we're going to keep the premium going. So his argument would be, look, you've misunderstood this business. You think this business is a holding company for Ether. And so, sure, it's going to trade at a discount. But I think this business is basically a venture capital fund with a ticker that you could trade. And, Tom Lee, I'm cleverer than you, and I can find stuff at deep value. I'm going to buy it, and it's going to get written up over time. So, of course, it trades at a premium, would be his argument. Mm-hmm. And that's been true so far, right? The fact is it has traded at a premium so far. So the question for investors, whether, people who own Bitmine or are thinking of doing so, is how long does the premium last? And the other thing to do is measure it. We between Yimin and I, we cover crypto extensively, and we report periodically on, well, if you look across all these treasury companies, are they above or below NAV? Sometimes they're above, sometimes below. And, there's a long-standing history of, because investment companies themselves are not a new thing, you buy below NAV and you sell above NAV and, just make money continuously that way. So I don't think the short report is wrong. I also don't think it's a disastrous story for Bitmine. It's just a question of, can Tom Lee keep the plate spinning? And, he is pretty good at that.
Yeah.
So I do want to call out what he's saying is absolutely accurate. And I also think the short report was the most obvious framing of why you would be short on a vehicle like this. It's the same thing as who said it? Jamie Dimon said he thinks, or someone said there's going to be some kind of market pullback in the next 2 years. Obviously, it's like saying it's going to rain in London sometime next year. Obviously, so there is the premium argument is absolutely accurate on Bitmine, where they're shorting Bitmine on the assumption that the premium will collapse over time, just like it did for strategy, because like consumer products, consumer fanship also fades as time goes on if they don't see any kind of real alpha. And maybe that's the case.
That's a good way of thinking about it.
Yeah. So maybe that's the case, but also I don't know. So far they've consistently proved they deserve a premium and they can efficiently manage that premium in a way to provide alpha to shareholders. Tom Lee is very much for the retail. He knows the framework of it. He knows maybe how to finessing has a negative tone to it, but he knows how to massage shareholders' value into what he does. So I think there is somewhat of a better lens in this route than what, I don't know, Saylor did for strategy. Because I'm sure Tom Lee learned what Saylor failed to do in strategy. Because look at Saylor's strategy's chart. It clearly something happened where it's stalling out, or something is just it's getting a little stale. Hopefully, second mover advantage helps.
I think you look at the two things. You can't argue with Michael Saylor's wealth creation for shareholders and for himself. Incredible. Mm-hmm. And he's a smart guy. You listen to his old interviews pre-MicroStrategy or pre this incarnation of MicroStrategy. He's a smart guy. Tom Lee is a more sophisticated capital markets operator. Mm-hmm. And so if you're going to bet on one or the other, for me anyway, I'd bet on Tom Lee. I think he can navigate through different environments. He's got these new ETFs that they're launched and they're managing. He's a very smart guy. I think in the end, it's okay. If you think Ether is going to keep going up, and I do, and I'm long Ether through ETFs, then I think Bitmine's fine to own. I think you just have to say, well, if I own it, if it does drop below NAV, what does that mean? That's like a 20 or 30% drop. Okay, that's not terrible. If you don't own it on leverage, you don't own double levered ETFs and so on.
Well, don't you think they're just going to rebuy back shares if it goes below NAV? That's the thing.
Maybe. I would compare it to SharpLink, SBET, which I also own. And SharpLink has terrible capital markets marketing. It's dreadful, right? They cannot spin a story. But I suspect it's quite a well-managed investment company. So they don't tap the at-the-money equity issuance facility when they're below NAV, but they have been buying back stock below NAV. And I wonder whether, over time, in the end, SharpLink proves to be a very solidly, quietly, well-managed business. It isn't today. The stock's underperformed Bitmine. I own it. I've got a couple of profitable positions, some unprofitable positions in it. And it's been, I would say, a bit of a disappointment, which I think is a failure of marketing, not a failure of reality. So, I don't know. I think if you want to own Ether, then the easiest ways to own it are, for me, ETFs. You have some protection that way. Native crypto, if you feel comfortable with that. You don't have to own these treasury companies.
Yeah. Let's pull up. I know we want to look at the Ethereum chart, and we have that called out. And then I know Yimin also has a view on. I want to go to Bitcoin versus gold because that's an interesting dynamic too. But let's stick on Ethereum for a bit, Alex, in that chart specifically, and what we're seeing there.
Yeah. So this is the chart from the April lows, right? And personally, I'm sort of late to crypto. We talked about this last time I was on, but I come at it from the old world. And what's really surprising to me is that the crypto community, or large parts of it, seem to be they haven't quite realized, I think, the degree to which Ethereum has been boomerized. Right? It has been captured by Wall Street. This is now Jamie Dimon's plaything. Right?
Yep.
So as tokenization of assets continues, and it is on the way, and it's going to continue, then the demand for Ether is going to rise. And so the price of Ether, all other things being equal, and as long as the supply remains somewhat controlled, it's going to rise. I think there's plenty of upside in Ether yet for this reason, which I think it's still not well understood why that's happening. But anyway, the chart here, so you've got your April lows here. It's in a fairly standard 5-wave up move. I think the low at the last wave 4 low you see there in late September looks like it's holding. And if this pattern, it's only a pattern, nothing written in the stars about it, but if this holds, it will probably make it to 5,500, maybe 6,500 before a probably fairly material correction. But if you zoom out and you look back over months and years, I think this is a going up asset. It's just going to be a volatile one. I
have a friend who's deep in crypto, and he gives me a lot of guff because I bought some Ethereum in like 2018. I want to say, what was it then?
Well
like 400. No,
well
it's not though. It's not. So it went up a little, and then I was like, I'm gonna buy a Peloton bike.
Okay. Okay.
Which honestly is a long-term investment in my health. I still have the bike, but god damn
it's like the Bitcoin pizza story right there.
It is, and the funniest thing is this friend also has like the most crypto positions of anyone I know, and he literally uses my Peloton login to do like body workouts. And I'm like, while he's like making fun of me, and I'm like, get your own damn login. Anyway. Yeah, I used to be, I was like, I was in it early, and then I, paper hands. But what are you going to do? What are you going to do about that? Let's kind of zoom out a little bit. I'm going to go to Yimin. I know you got a chart of the Bitcoin and gold performance because it's interesting. These two are they're both rallying. They seem to be sort of operating in parallel. Gold has been a big headline this week. It's continuing to reach new highs. We obviously have some political unrest or dysfunction, as we often do here in this country. But what are you seeing across, Bitcoin as more of the store of value story versus the Ethereum use case? What are you seeing in this view?
So just zooming out about what's happened this year, we see that gold has gone parabolic. But in fact, gold did spend about 6 months between April and September in a consolidation pattern. And what you also see is that Bitcoin actually has underperformed gold, which is very rare given its volatility. And Bitcoin is worth about 2 trillion versus gold, a 30 trillion entity that is going up like a growth stock, right? Mm-hmm. And so this chart, we're actually stripping out the dollar impact. So usually a negative dollar falling is supportive of gold and Bitcoin because they're quoting in dollars and it provides liquidity. So stripping out the dollar impact, gold is has gone up a lot. In fact, it's the best year for a long time, up 50% this year. So that is a bit of a warning shot of a potential investor lack of confidence, anxiety around a very large-scale crash that could be caused by maybe the budget deficit issue, too much treasuries coming to the market later next year, And we last saw this back in this type of rally back in 2007, and that didn't end up very well. And what happens also is that gold is not just about investor safe haven, it's also a subject of liquidity. So when there is growing global liquidity, gold goes up. And it responds very well to the global liquidity factors we watch by around a lag of 3 to 4 weeks, so a month, whereas Bitcoin corresponds with that with a lag about 3 months, 11 to 12 weeks. So they're essentially taking turns to catch up and making moves. So in a way, gold is moving ahead of Bitcoin, not necessarily because gold is better, it's just the liquidity is flowing into gold first, and with a 2-month lag followed by Bitcoin. So on the question about Bitcoin versus Ethereum, so interestingly, if you look again in terms of time lag, when Ethereum rallies, Ether tends to rally about 3-4 weeks after Bitcoin. So it's another rotation play by investors going from gold to more risky assets into Bitcoin, then into Ether, and then finally into things like Solana, Ripple, and altcoins. So I do think, so Bitcoin has recently just started another rally, and I do think Ether will come up in due course as well. And this is all following the same liquidity pattern. And what we're seeing also very interestingly is that in the short term, we're talking about daily correlations, gold is actually negatively correlated with Bitcoin. So Bitcoin is more viewed as a risk assets like equities, like stocks, which trade negatively with gold and bonds right now. But in the long run, they tend to catch up. So Bitcoin also catches up with the global M2 liquidity that is flooding into the market. Right now, China is injecting a lot of liquidity into its markets. You see the Chinese stocks rallying really hard in the past couple of months, whereas the Fed has just started cutting rates too. So all of that is supporting a overall everything rally towards the year end, maybe into early next year. But how things will end going into next year or middle of next year, I think we should start getting a bit more cautious.
Yeah, that was maybe my next question. Like, what happens what happens macroeconomically where the gold rally gets slowed down or stopped? Like, what factors would need to come into play? So,
I think if you just look at if we can pull up the chart for the gold rally from the 52-week low historically. So I know everyone likes to look at drawdowns. But gold has rallied from its 52-week low at a similar peak to what we saw in 2007 and also after the financial crisis and in 2011. And in those instances, once the stock market starts, so yeah, this chart will show the top pane is the rally size from the 52-week low. So we're near the peak of around the great financial crisis. And the bottom pane shows the percentage of days spent at the all-time highs, which is around 20% right now. So 20% of the past 1 year, gold is at its all-time high. Again, that is a similar peak to 2007 and 2011. And what we see is that when the stock market starts to roll over, gold actually extends its rally a little bit more because of the safe haven effect. Yes, please show up the next one. But so it goes up a bit more because investors flee the stock market and go into gold. But then because there is a liquidity vacuum driven by high volatility in bonds and stock market crashing, so collateral values all coming down, the liquidity vacuum actually drags gold down as well with stocks. So I think we have to be very careful now looking at the twin peaks of stocks with gold kind of peaks a little bit later. We could have stocks having a pullback into early next year potentially, and gold still having a little bit more gas to go in this rally potentially before rolling over after the stock market crashes. So I think that's the things I'm worried about. And exactly what triggers this? We've just passed a huge bill for government spending. The worry is that the Fed hasn't started QE again, restarted QE again, still in a semi-QT mode, tightening mode, where it's reducing its balance sheet, even though at a very slow pace. With large treasury issuances coming into the market, the banks and the private households and hedge funds and pension funds, they could get very saturated in terms of the buying power, consuming the treasuries. And that hasn't manifested yet, but there could be a point when that happens. So that will create a liquidity drag where there's not enough, essentially, money going around in the real economy and in the markets to buy up all the assets under the sun. So that could be a real liquidity catalyst for the next pullback. And in the short term, we're not there yet. I think we could get a little correction and still heading higher for the year end. But medium term, looking at the next 12 months, there is a danger of the scenario I just described.
Interesting. I want to turn also, I know we have a bunch more stuff we want to get into with you guys. Let's go to the Qs, because I know Shay likes that one a lot. And also I know we're going to talk about semiconductors as well. So on the NASDAQ, what are you seeing here? And that's relevant and pertinent to our viewers at home.
Yeah. So the way I like to draw these charts is I always try and draw some terrible collapse happening like today. Because then if it happens, I'm not taken by surprise by it. If you zoom out and look at a longer term chart, yeah, I agree with you. I mean, I think the market's got some way to go yet. I think the Qs can make it to 660 without too much stress, and we'll see what happens after that. But right now, the way I like to track this is to go, okay, well, we can all draw waves or lines or whatever our preferred charting method is, and they're sort of interesting. But for the sort of short-term tripwire, I like to use these short-term moving averages. So that the red line you see on there is an 8-day simple, green 21-day exponential, blue 50, and simple, and purple 200 simple. And I like to use those to go, okay, so things sold off a bit today. How much do I need to worry, right? If you're above the 8-day, you don't need to worry at all. If you're below the 8 but above the 21, think about worrying, but you don't need to worry yet. A couple of daily closes below the 21, start to worry. And the fact is, we've had such an incredible run in the NASDAQ and the S&P, since the April lows. There's going to be a pullback at some point, if only just to spook late levered long. So many people have piled in the last month or two, so much money through levered ETFs, always long. There's very little usage of the inverse ones. People don't really use those or understand them well. So I think get ready for a little shakeout, and I think it will cause an unduly negative emotional reaction because things have been so calm and up for so long. So at some point a little sell off, but I think that when it comes, it's just a drop before the next high. Big question I think is, as Yimin said, what happens early next year? And if I look at in our work across the firm, we look at macros. You can hear from Yimin. We look at technical analysis like this. Yimin produces a tremendous set of AI-driven signals, which he runs on the NASDAQ, the S&P, gold, Bitcoin, all these things, which are absolutely cold as ice, right? They don't have feelings. They don't know about, late levered long money. They don't know about, what Jamie Dimon just said. They're pure maths, and they do a tremendous job within our work for how to call risk on and risk off. He's very modest about it, but does a great job with it.
The psychological component is interesting. I hadn't thought about the lack of, I guess, recency bias of things just being great for a long time. If there is a bit of a drop that's extended, you think retail especially, it could have an outsized reaction just because we've been up.
Yeah. I mean, if you say that chart happens tomorrow, right? So a drop to 540 on the Qs would be garden variety correction. Nothing to see here. Retest the 200-day, 38.2 retrace, off we go. Just normal. Nothing to worry about there. But the reaction it will cause, if you just piled into TQQQ or QLD, or you bought a bunch of NASDAQ options expiring, December call options, then you're going to freak, and you're going to sell and panic and wish you hadn't done it, and that's going to cause
people like Shay with cash. He's just ready to. We've been talking about Shay's waiting for the paper hands just to weaken.
I mean, I've been saying the QQQ is going to hit 565 for a while, sometime around the range. If not, it's going to consolidate until the 21 week EMA catches up to it, because right now things are overbought in the daily chart by a decent chunk now on the RSI. I know RSI is bullish if it's higher, but for me, my indication, if it's a 75, I think it needs to cool off. Like, there's a half glass full, half glass empty view of it, but that's my take. And like what Alex is saying, like have that preparation, have that buy list that you want to add, so when things do kind of get a little fuddy out there, because they're going to, that you're not going to be sitting on your hands. You're going to be able to capitalize it when the VIX won't get a 50 plus handle again unless some black swan event occurs, but like VIX might hit the 20s again, and from there you can dip your toes in a bit. And I also do know from the people I talk to, since I am very involved in the retail community, a lot of people are over levered right now. And I think they are just kind of been accustomed to the past 6 months of things like, I'll buy the dip, and has been working out, like guaranteed. So as soon as for example, the 21 week EMA, if that fails, I think that might be the trigger of like, wow, I'm over leveraged, and like maybe margin calls, something else happens, and we actually touch the 200-day moving average, which I don't even know how long it's been since we touched that.
You're right. I mean, Jake, who you have on later, does a great job. He has a huge retail following for his work. And he does a great job saying it's the leverage that will kill you. You can get anything wrong, but too much leverage is what will kill you. Even if you were right, but your timing was off a bit, you didn't work out what you broke, what terrible things you broke could do with you. It's the leverage that will kill you. Yeah, people get lazy with leverage. Leverage can work for you, obviously, it can be tremendous, but people get lazy with it in these sorts of environments.
Do you know why? It's because like when you're hot at the blackjack table, nobody ever says, "I'm cashing out." Like I'm good.
I do.
I've never played blackjack.
That's why I got the bike. You're right, Shay. Yeah. Well, that was gonna be my next question. Like, how is it obvious to people when they are over leveraged, or like how would people watching right now, are they thinking like, oh shit, am I like, how would they know?
You would know if last week we had maybe a 2% pullback in the market. If you felt like you wanted to throw up, or you had some pit in your stomach, you are over leveraged. It's a 2% pullback on a 50% move past 6 months. That's your tell.
Okay. So if you're a little nauseous last week, maybe you should.
Last week should have been a nothing burger. It should have been right. And people get too emotional about this stuff generally, right? One of the reasons I like these AI algos that Yimin produces is because this whole thing is just a video game, right? It's just number go up, number go down. Why get emotional about it? It's just numbers, right? And if you invest your personality into some stock or other, or you think it's going to get you a car or a house, you don't go to work that way. And investing or trading is just a job. It's just, you want to be cold as ice. And your reaction to any day, right? If it's a bright green day, your reaction should be oh. And if it's a bright red day, your reaction should be oh, right? But it's true. And then what shall I do next? And if your reaction isn't oh, you're doing it wrong. You're not on it, and you're too levered, or you haven't thought about what's. Take a step back, learn some more, and calm down.
I love it. No feelings, no emotions, guys. Just
no feelings. Right?
On that note, I want to throw out a interesting stat that everyone probably finds relevant in today's market. So on SP 500, so RSI is trading at around 70 right now. Since 2018, it's happened around 40 or 50 times. Every time RSI crosses above 70 and you extrapolate the forward returns in 3 months, that forward returns in 3 months is less than 1%, essentially flat. Whereas if you bought the market when the RSI is below 30, the forward returns is about 10% in the 3 months. But that's only happened 18 times since 2018. So that doesn't happen too often. That just means you should buy the dip when it happens, but be a bit more patient when the market's overbought.
So I'll throw another stat out here so I can join the party, because I wrote this to my subscribers last week. On the weekly, I'm using the weekly because I think weekly has a long term of like what's multi-week move it's going to happen. Right now, the SPY weekly RSI is at a 72. It's overbought. But every time it touches the 75 level, it's pulled back somewhere between 9 to 35%. I know that's the craziest range, but back in 2018, it pulled back.
If that
That's
happens,
what I'm
people
saying,
are going
but
to lose their minds.
It's happened.
Right? There will be like
Let's
people
see,
jumping off buildings.
1, 2, 3. The past 8 years, every time it's hit that level, it's pulled back in that range all 4 times. We're not there yet. Maybe we get there in November. Maybe we get there in December, but it might set up a really ugly Q1. And also, you guys, people need to factor in, people don't want to sell this year because of all the gains they've had. January, totally different story. Now they're like,
exactly
right.
I'll sell. The tax bill will be so much further down the line. It's future shy problem. I'm not going to care about it right now.
It's a very good point. Very good point. Because, worst case, people sell now, realize a lot of gains, but then lose a lot of money on the next dip, don't have the cash for the tax, and then they're in a world of pain. And probably most people realize that. So it's a really good point, Shay. Well made. Yeah, people don't talk about that much.
Well,
so yeah, the world is crashing down, guys, soon. So just enjoy your time right now.
I was gonna say there was one slide Alex brought up. He's like, I like to wake up every day and think about the worst case situation. I like that attitude. It was 45 degrees Fahrenheit in New York this morning. It reminded me of that movie Groundhog Day when Bill Murray's like, it's going to be cold. It's going to be dark. It's going to last the rest of your life. So you know what? Buckle up, guys. It's going to be an ice cold January, but we like to be ice cold, according to Alex King. And you guys got to come back with us. I know we didn't even get to the semis, so maybe next week you guys can pop back. But Yimin, thank you so much for joining us, and Alex, good to see you as always. And come back anytime you guys want.
Thank you, JD. Thank you, Shay. Appreciate it.
All right, I think we got Jake Wujastyk coming in hot. Here he is. He's a black square right now. There might be a blizzard in Colorado.
Hold on. Where is the bell? I had no idea the market opened 2 minutes ago.
Oh, the bell.
The bell. The bell is slipping on. Let's see what's happening.
Can you make a bell noise for us? Ding, ding. No. Maybe the market didn't open. Maybe something. I don't know. Oh, there it is.
There we go.
There it is. What's good, Jake? What's poppin'?
Not much.
How was your trip?
It was good.
Jake was in Hawaii. If you didn't see the 12 photos he posted for everyone to see on X, let us know that he was in Hawaii looking at the sunsets. We get it.
I was there. Yep.
All right.
Glad everyone knew.
All right. Well, what's going on this week? Because I don't know. I'm on my timeline. You seem to be a little agitated about Bull or something's going on. You're talking people.
Oh.
Like what's going on over there? What's going on with Bull? I needed the tea.
Well, I mean, as we've discussed multiple times, people just get very emotional about Bull. So when it drops, people get a little annoying about it. So, I tried to give a warning. So with Bull, it's kind of interesting. This has happened a few times in the past. Not necessarily for me, but someone will reach out to me and they'll say, hey, my broker's, offering this massive borrowing rate on my shares for some random stock. And they started doing that on Bull a few days ago. So something was up, you could tell. So I tried to kind of be adamant about, this is probably going to take a pretty hard dip here.
How big of a dip you think? What's it? I haven't even been following this week. What's that now, and how big do you think it could get?
It already dropped, so that was kind of the whole spectacle yesterday. But
who cares that you 20x on Ondas? Let's just focus on the 15% dip on Bull, guys.
Yeah, unfortunately, I'm out of that one now. So they finally called me on my shares. So. ONDS.
A good run.
That was a good run. A good run. So
you'll always have Croatia with Jeremy Newsom,
Yeah, I'm looking forward to seeing him in a couple weeks and getting this Stocktoberfest on the move.
Oh yeah. You and Jeremy are going. We were talking earlier in the week about our plans to do drunk charting. So
yeah,
that's happening. We're just picking. We're finding a venue. I have a call tomorrow about it. It's like a very important, high priority call. It's like, where can we do the beers and the charts and what time of day is socially acceptable to do this. But yeah, it should
Perfect.
be a good time. Uh, I know last time also outside of Bull. I mean, if you have more on that one, we can go into it. But I also know you were talking a lot about trying to trade last time. So curious, kind of if there's any update on that front too.
Yeah, I mean, China made a pretty big move. I can share my screen here and kind of go over everything. But yeah, no, I generally am looking for, what's the laggard. Um, so JD continues to kind of be the main one that I'm, watching for. So hasn't made its move yet. I got in this one, weeks ago down here in shares, and then kind of switched over to options. So I still have options here. So nothing's really changed. I mean, it's the same exact setup um, as Baba was. You had the volume shelf, you had a volume gap above. I one of the questions that honestly, frankly, kind of drives me a little crazy is people asking, well, what's going to move the stock? And it's like, well, if I knew that, then the stock probably would have already moved. And I don't really care what moves the stock. Um, you don't make money on guessing what the news event is going to be for moving a stock. You make money on the price changing. So I don't know. I don't know what could potentially be the catalyst here. I don't really care. I know it's taking a little longer than I expected, but at the same time, the whole structure of the chart remains there. Price remains at the volume shelf. I have the January call still, so there's not a lot of urgency on my end. It would be nice for this to move, but I have January calls. So we'll see kind of how this plays out. So yeah, I mean the China trade for the most part moved. I mean Baba, when we were talking about Baba, it moved from 120 to 190 or something. My whole thesis on that one was really just to trade it to the gap at 132. So that moved a lot more than I was expecting. But as far as China goes, I mean, it kind of played out. We're just kind of now waiting on JD to kind of make its move. But Baidu. I think we were discussing Baidu a couple months, maybe
Yep.
6-ish weeks ago. That moved from 90 to 142 or something. So these Chinese stocks are like very musical chairs type of kind of trade. So one moves, then the next moves, then the next moves. Like I said, I don't know what could potentially move JD. I don't know if it's, maybe an update on their sales that came out from their kind of like Amazon Prime Day comparison type thing that's going on now. I have no idea. But all in all, I'm just kind of sticking to the thesis on that one.
All right. We're going to get back into some charts with Jake, but let's move to a couple news headlines really quickly. That came in this morning. We have some earnings news coming from Pepsi. PepsiCo delivering a solid quarter, but there was an interesting nuance in that ties into conversation we've been having the last few weeks on these weight loss drugs, because the beverage sales were looking pretty good. The snack sales, so Pepsi also owns Frito-Lay. That's Doritos, Fritos, Cheetos, Tostitos, all the O's. Those snack sales continue to lose ground. And so it would seem like people are snacking less. I'm personally not snacking less at all. But overall for Pepsi, the revenue coming in around $23.9 billion, just above estimates. But again, beverage sales rose 2%. People are still drinking soft drinks, diet soft drinks. I think Pepsi is Pepsi Aquafina? No, maybe it's Dasani. And then the food sales, though, down 3% as consumers pull back on snacks. I'm curious, like, I know, Shay, we talk about this one a lot with these weight loss drugs. Is there, there's the proactive trade of like looking at these companies and which ones are set up to win via distribution, as you've talked about. And then there's the who would get shorted in this situation. Do you think this is a trend that could sustain with these snack sales, and what would that mean for someone trying to make a move on the other side?
I think the world, especially young demographic, is trending towards a healthier lifestyle. I think that they care a lot more about quality. I think there's an ick factor on a lot of these products that used to be like go-to trash to now it's just like, why are you eating that? There's so many derivatives of this product that's healthier, cleaner, etc. maybe I'm just an Angelino. I live in
I was
LA,
gonna
so
say,
that's like
Jake,
the
like, what's the
lifestyle.
vibe in Colorado? Are people still eating Cooler Ranch Doritos or not so much?
I mean, I have no idea. People like to smoke weed here, so probably.
That's another thing, yeah.
That's true. There's probably a
Yeah.
correlation. They need a targeted marketing strategy for
Yeah.
Colorado. I did just see Cheetos just came out with a pair of pants that have like sides that you wipe your hands on when
Oh,
you're
wow.
eating the Cheetos, which is disgusting. But yeah, so Pepsi snacks, something to watch. Jake, let's pop back over to your neck of the woods. We talked bull, we talked China trade. What else? We've talked about Aklo before. What else are you watching? What else are you in on in this moment?
Yeah, well, I'll kind of go over the bull chart. Let's see, share entire screen. So the bull chart's pretty interesting here. So you just had some really weird stuff going on here pretty much from Monday. So one of the things I think I've mentioned on this show, and I mentioned a lot in my subscription and even like on my public post, when you have these red candles, almost every single red candle from starting on Monday, you were having this intraday move up in the Williams percent range. So the price was dropping, but the Williams percent range was actually moving up. And generally, when that happens, that is a pretty insane signal for me. I would say from all the signals that I've kind of found in the market, it's one of the least lagging. For example, I mean, you can have divergence forming on a stock for a long time, but the thing about this type of divergence is it's a single candle divergence. So, i.e., you have one red candle, but then the Williams percent range for that particular candle. So if we're looking at the daily candle was red, but then the Williams percent range actually moves up as the price is moving down. So that's generally for divergence. You're looking for, divergence on something that could be like this, right? So it could take, it could literally take over a month to play out. But this particular type is when you literally have a single candle divergence. So we kept seeing that, but then at the end of the day, it would go away. So you could tell something was going on there, but as I mentioned, people are reaching out to me. All my brokers offering me this massive rate on lending my shares. I've seen that before, and when people have reached out to me and told me that, price literally dropped. I've seen some prices drop 20-30% in a couple days. So that's kind of how I knew, like, okay, something's off here. But at the same time, you have no idea what the magnitude of that move is going to be. I think pretty much anything under 12 was kind of a gift yesterday, but we'll kind of see what happens. A lot of people are worried about these off dilutive offering equity agreements they have with some companies. But if you compare, and this is definitely not Robinhood by any means, you would hope that maybe they take a page out of Robinhood's book, because at this point, their PR team does nothing. They're talking about, on their social media page about corporate bonds. It's like nobody wants to trade corporate bonds. Like, read the room a little bit. So, maybe they'll catch on to that and start, being a little more active on their PR side, even maybe on their social media side for their company. ONDS, part of ONDS, the reason it got so much attention was because the CEO was really good at marketing his product and his company. He's active on social media. He talks about his company. He talks about what's going on. And so when you have a company that's literally, just pretty much operating and not really updating on anyone, that's an issue. But I mentioned this yesterday. Everyone's worried about this dilutive financing and all this. Well, if you look at all the shares that can potentially go on the market and, the current price, it's not that much, considering this should probably be a $15 billion market cap. So yeah, that's just my opinion. So, I don't think the CEO or any of the executives at this company are going to be like, all right, well, let's death spiral our stock price from toxic financing, because everybody who uses Webull, a lot of them like it. So they probably own the stock. So the dumbest thing you could do is literally destroy your stock price, piss off all your customers who own the stock, and think that you're going to keep those customers. So I just don't think that's going to happen. That's why I'm long on the stock. I have shares, I have options, I have sold options. So I'm kind of like the whole fiesta there with bringing all types of food to the party. But like overall, if you look at the longer term chart, you still just have a ton of volume aggregating pretty much from the IPO. You've just got this huge amount of volume aggregating here. So, I think from at least a short term perspective, I think this could probably hit 1365 by next week. There's a very, very small gap up there at 1365. If that happened by tomorrow, you would have a pretty solid hammer candle forming on the weekly candle chart. So, yeah, overall, definitely bull is up there on things that I'm pretty bullish on, and for the most part, I have shares. I do have options, but the majority of my position is in shares. So then I can sell covered calls. The covered calls, I mean, the calls in general have a huge implied volatility, so the premiums are very expensive. So that's kind of why I sold the covered calls earlier this week, anticipating, okay, if this is going to get dropped, then I'm going to at least sell covered calls and make some money as I'm waiting for this drop to happen. So yeah, I mean, that's bull. I also think, crypto's probably going to have its day, but it's crypto. It's probably going to shake everybody out before it goes. BMNR is one that I have only shares in. I sold the options yesterday because I was tired of dealing with just the chop and the implied, like just the IV kind of crush on these options, because there's such a large move priced into the options. If you don't get it, the option just deflates. So I was able to get out of those options with some profit based on just dollar cost averaging over the last couple of weeks on those. But I still do have the shares. From just a technical perspective on BMNR, you kind of have this bull flag forming here. Price is continuing to hold up at this volume shelf. There was a short report that came out yesterday on this by Kerrisdale Capital. I'm not fully, like, if you look at MSTR is nowhere near all-time highs. And some say, BMNR is pretty much the exact same thing. So if Ethereum rips, I definitely think this is going to move. But, I think Ethereum is going to have to be a lot higher than it is now for it to get anywhere near these highs that we saw in July. It's almost like an option. I mean, if you're diluting the shares of this company that's mirroring the moves on the spot price of something else, then, and if you keep diluting it, the prices are going to be off, i.e. 131 in July is probably not going to be tested unless Ethereum ripped to like 6,000 or something, or more, probably more. So this one's also one of those things. I just have shares. I can sell covered calls on it and make money and still hold the stock. I'm not like, I believe in Tom Lee. I think he definitely knows what he's doing. I think he's spot on with what Ethereum is going to do, but it is Ethereum. Ethereum is an extremely frustrating financial asset that moves, right? So technically, you still have this inverse head and shoulders. Price moved down right to this VWAP that was anchored from this September 25th low. If we break that, then the kind of the structure of this inverse head and shoulders is definitely broken. You've got a little bit of almost like a dislocated shoulder right here. But people get so worked up and so focused on these technical setups being perfect that they kind of forget, like, it's just a pattern. It's not perfect. Now, if we did break and close below this VWAP, then yes, I think the inverse head and shoulders is probably done. But for now, yeah, you can have one shoulder that's a little lower or a little higher than the other one. That's just how technical analysis works, especially in crypto, where you've got a bunch of leverage, you've got a lot of price movements in there that sometimes mean nothing other than the fact that somebody just got liquidated or someone's too heavy on leverage and they had to forcefully get taken out of their position. So overall, inverse head and shoulders is still there. I'm not really a huge crypto person. I always follow it because a lot of people like to track it and trade it. But my exposure to it is just through BM&R, and we'll see how it goes. If it breaks down, it breaks down. But a lot smarter people than me are definitely bullish here, and we'll see how the rest of October goes.
Jake, I want to quickly go back to something you said on the bull chart because I'm curious what Shay thinks about that, because I spotted something you wrote on X that was basically something I think about a lot when you're like, clearly the CEO of this company knows what they're doing. And sometimes I have that same inclination. I'm like, oh, and then sometimes I'm like, maybe they don't. Like, I don't know. Like, you've ever met, like, you've been at like a party and there's like a surgeon who's like blacked out on the couch and you're like, huh? Like, so
Oh, wow.
I mean, their CEO is Anthony Denier. He's not as out and about as like a Vlad Tenev. I looked when you were talking. He's not, doesn't have a presence on X. So I guess like Shay, I want to ask, like, how much does that argument hold? I mean, it depends on the person, but what do you think about that? Because I think about that a lot where I'm like, well, obviously they know what they're doing. And then I'm like, maybe they don't. I don't know.
Well, I think if you're in a commodity of a space like what Bull is, like the brokerage business, you need the captain to right the ship to communicate a narrative on why us and why we're special. I think for Bull, I don't know much about their CEO at all, but I do think there's an Eastern world um, exposure, if that makes sense. Like, I don't know, there's some kind of parent company of China or whatnot. I know those are very specific flavors of what the management can actually say or not say, if that is in true fact. So yeah, but a lot of times these companies under $5-10 billion, like their CEOs, like they are learning on the job as they're like experiencing their stock going up or down, volatile, etc. Like people just assume that as a CEO, you're seasoned, etc. A publicly traded CEO, I promise you, it's drastically different than being a privately held CEO. So even if they've been a CEO in the private markets, it's a totally different ball game in the public market. It's like you're an incredible minor league baseball player, then all of a sudden you're struggling your first year in the majors. It makes sense because you have to adjust. Kind of the same philosophy for Webull CEO. Like they just became public in the IPO market like this past year, I think. So like you have to give it time to like get the rust out a bit on like what he can do, what works, and how he can balance being a salesman to the mass audiences while also being an operator as a CEO.
Yeah.
Yep. I think one thing, just a lot of people, you kind of will with Hood. I mean, Vlad pops up in my feed like every day, responding or posting to someone. So like, I think a lot of people are comparing it to Vlad or whatever. Yeah, Vlad.
I alternate. I don't know. Someone tell us.
But yeah, that's kind of what I meant though, is just like you kind of almost have to, I mean, you kind of have to replicate what's the very successful company that's our competitor doing and how can we do that? But totally to Shay's point, like, or Shai's point, it is technically kind of a more of a Chinese kind of culture there, I guess, at the company or what can be done. So I guess we'll see what's possible, what's not. But
on the marketing front, I know I'm here in New York. They did a big multi-year sponsorship with the Brooklyn Nets when they had like Durant and Harden and KD, and then that did not pan out well. I think they pay people to go to Brooklyn Nets games now, but they have a really good Webull t-shirt cannon situation in the third quarter. So I don't know. I don't know. We'll see about that one. I think the bull, it's just funny. I like Jay. It seems like people are a little agitated, but it makes you a little agitated back, and everyone just needs to calm down. The world isn't perfect. But Jake, when you were talking, I asked the chat for people to guess what your favorite song off the new Taylor Swift album is.
Oh wow.
And we had some guesses.
Oh wow.
Didn't even know that
oh, come on.
We know it's What was that song that was like a little spicy? Was it called Wood? Wood.
That's definitely Jake's favorite.
Wood.
He doesn't even get the joke. You're gonna Google it after and be horrified. Somebody guessed it was the song Wish List, and they spelled it correctly with the dollar signs, but then they said, I haven't listened though. It's like, you definitely listened because you spelled it with the symbols in the name. But Jake, you don't have to lie. You can just tell us what song it is. No one's even watching this right now. Everyone's gone on to the next thing.
Yeah, to be honest, I literally didn't even know she came out with the new album. I thought, is that like the reason she's in theaters right now or whatever?
Oh my God. How do I get your level of like isolation from the world? That sounds great. Just
You
like,
go to Hawaii. That's what happens.
yeah, true.
I'm
Yeah.
listen to Taylor Swift in
Very
Hawaii.
true. All right. Well, you take a listen and you report back.
All right, we'll do.
Before we let you guys go, a couple other headlines. Delta reporting earnings, stronger than expected profit forecast thanks to their higher fares and the steady demand from their luxury travelers. Same story we've been saying, the wealthy cohort of the population kind of pulling some of these stocks and these businesses forward and carrying things through. They beat expectations with 15.2 billion in revenue. Profit margins keep expanding because they keep raising costs, and their Comfort Plus is doing well too. And as I mentioned, Taylor Swift also just hit another milestone. She's now worth over $2 billion. So she doubled her fortune in 2 years. Maybe she had some Ondas too, Jake. Maybe she's a
Possibly.
subscriber.
Maybe she could be. One thing about the Delta earning that's interesting. You mentioned the luxury travel or whatever. Up is the one I'm also still in. You've got the technical setup here. MACD's about to curl. Last 2 times that has happened. Now you did have a false signal back here in September, and then you just had a continuation down. But as far as this goes, I mean, this is still one. I mean, yes, from the highs we're down decently, but I mean it's still higher lows. And
Mocha.
Yeah, that's Mocha.
Hi, Mocha.
I don't even know where Mocha. Stop. Yeah, I mean you still have higher lows. You've got the MACD curling to the upside at a higher low. So overall, this one I still think it can go up. I don't know how much. I mean, if you do a very basic comparison of when the MACD was curling back in July and then back in August, pretty much from that mid curl to the high, you had 48% back in July. August, you had about 155%. So if we were to take a wild guess, who knows, maybe like 250s, 260s, this could probably get to this time. But it is interesting that Delta did come out with the luxury travel comment. So we'll see what happens.
Yeah. Rich people staying rich, spending money, good for them, good for these companies. Shy, is it next week you're going away, or is it the week after? Is it next week? Is this the last show for a little bit?
It's the last show until November for me. So yeah,
my God.
let's hope the market doesn't do anything.
I hope Tesla launches all of the cyborgs into the world when you're like in France or whatever.
I know. Today's like my going away tour. Like I have a lot of TV hits I have to do today before next week, and it's gonna be fun. So I'll still be active. Just I won't be in a vicinity where I can actually be cameras on.
Yeah, that's good though. Take the time. Where can we watch you on TV today?
Fox, Schwab, Yahoo.
Okay, check. Jake, are you going on TV today?
Nope.
Okay. Where can people subscribe, Jake? Where can people subscribe to get more of your grumpy ramblings and amazing takes?
Just my X.
All right.
Yeah.
All right. Check them out on X.
There it is.
Check them out. All right, gentlemen. It's 9:59. We got to get this party started over here. I hope both of you have a good weekend. And for everyone at home, I'll be back Monday. I don't know who I'll be with. Without Shy, I'm kind of like lost. I'm like lost dog wandering around the streets of Manhattan. So, Vaz. Okay, yeah, we got the girl squad in. All right, you don't want to miss that. Vaz is one of my top 3 favorite people lately. So, no offense to you guys. You may or may not be in that group. But to everyone else, thank you for tuning in. We will see you guys next